Well, for the time being, let's focus on Borosil Limited. They reported a rather good set of numbers, good revenue growth, the EBITDA growth as well. Profit after tax was impacted, though, by higher depreciation. To discuss the way ahead, we're joined by Shreevar Kheruka, the MD and CEO at Borosil. Hi, Shreevar. Good morning. Thanks so much for joining in. Well, both your segments have grown quite well, the consumer segment as well as the scientific business, which is pretty good. Wanted to ask you a couple of aspects. How is Q3 shaping up, point number one? And what does it mean in terms of growth for the entire year?
Well, thanks for having me. As far as the consumer business is concerned, we've had a pretty tough Diwali actually. The year has been much more challenging than expected from a growth perspective, and we've really had to push very hard to achieve even these growth numbers. The Q3 is say in line with what we see in the first two quarters, so no major deviations, and I expect we will continue to grow, but maybe slightly slower than we had ourselves anticipated. There has been a lot of pressure, in the markets from on pricing, and also I would say in demand itself has been a little bit muted. So on the consumer side of the business, things are a little bit challenging, but we've added capacity, and we've also added new product categories, which have allowed us to maintain that growth.
Shreevar, you're sounding a little bit cautious. So just wanted to get to the point in terms of revenue growth. Earlier, you were talking the consumer segment, you'll grow by close to around 20%. And I think the scientific business, you'll grow by, on an average, close to around 15%. Do you maintain these numbers for this year? And what about the margin outlook in both these two segments?
Yeah, absolutely. We will certainly maintain these numbers. Actually, frankly, when we had added the capacity, we thought we would outperform this. But so 20%, from my point of view, was a little bit conservative in terms of guidance. But we will definitely maintain the guidance, but probably will not be able to outperform that guidance. On the so as a whole, it's a bit more challenging than expected. That's why I'm a bit cautious, frankly.
No, that's important. It's important that you put it on board, and it's very candid as well, right? I mean, to tell us that there is definitely a slowdown in consumption, and here's how it's looking on the ground. So you said that there's some pricing pressure that you're facing. Can you just elaborate on that? How much pressure is it currently compared to, say, what you've seen in the preceding 6 months? And what would this mean for your margins? Because the first half, you did about 14.5% margins. What kind of pressure do you see in the second half?
So in general, what happened after COVID was that we saw a lot of imports, unorganized imports, in my view, reduce. Because obviously there was not accessibility to China, or there was low accessibility to China. Moreover, freight costs were very high. So we saw that unorganized players were, a little bit muted. Now this year, we've seen somewhat of a reversal of that trend, where we do see a lot of imports coming in at very low prices. So in that sense, customers have a lot more lower price options to choose from. And therefore, we believe that's impacted, or that's had an impact on our ability to keep prices higher as we would like. On the flip side, the reason we have still been able to drive margins improvement is that our costs have come down. And that's owing to two reasons. One is commodity prices themselves have come off. And second is that economies of scale. So we have had some operating leverage. So we've been able to maintain and grow margins. I don't see margins coming off. I see them improving. We've given a guidance that they should be in the high teens, in the next year or two, which we will maintain. But in principle, we always try be a little bit, let's say, a little conservative in our guidance, and try and outperform that.
Shreevar, hi, good morning. So just to pick on that a point, is it the fact that lower priced imports, right, glassware is available and that is hurting you, or is there actually just a down trading because consumption trends are weak, and we hear that from other businesses as well?
I don't think it's to do with glassware being available at low prices. I think it's general consumption trends being weak and optionality available in the market. So, for example, when people are going to give a gift, they are not necessarily looking at glassware to gift. They're looking for a gift with a budget. When they have many more options available, then they switch to other products. And therein lies the challenge for us this year.
Interesting. Shreevar, final question before we let you go. By when do we see two listed entities?
Yeah, that's a good question. We've finally got an order from NCLT approving the merger scheme, which was much awaited. And I think by January sometime, we should see Borosil Scientific being listed as a separate entity coming out of Borosil Limited.
Oh, by January, you said, right?
That's right. That's
Okay, all the
expected.
best. Okay, all the best. Thanks a lot for that quick, analysis on the business. And you said that things are slow now, but hopefully things should recover over the next year or so.